Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Tuesday, June 19th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, you can see the ES has had quite a sell-off here in the overnight trading since after hours yesterday. ES down 1% right now, 44.5 point range. That's 214% of average range. So basically a big time move that we're seeing here today. We could be looking at further overall downside continuation if price cannot reestablish back above 2760. And so right now what you see is we're actually on a path here where we've gotten a nice little pullback within the recent channel structure. The last couple of times we've seen this type of behavior here and here, it's been followed by quite a bit of strength for the following 2 to 3 weeks. We've seen that behavior here. We saw it here, but it failed before it came back and got strong this time. So each of the times that we've had a big sell-off here of this nature, we've seen that type of behavior. If we bring this down here to a 1 period, what you'll notice is that today's range, while it's rather wide, it's 214% of ADR, 44.5 handles. You can see down here that it's not the biggest that we've had in the last couple of months. We've had a couple of bigger days on the downside, one of which was this one here, and this one was pretty significant, but again followed by a very bullish reversal, and that again could be what plays out here. Remember, as I mentioned before, 2741 and as low as 2730. That 31 level right there is the zone for swing and long-term bulls to defend. Defending that area would suggest another return higher. We could be looking, if this is the low, we could be looking at a bounce back into recent highs, followed by continuation toward 2829, which is the January 31st FOMC key level. So this is a very, very important zone to hold for bulls, and again, we could turn around over the next 2 to 3 weeks if this area continues to hold. Alright, let's take a look at the NQ. Here's the NQ. Very similar price action here for the NQ. Uptrending price structure, pullback here in overnight and pre-market trading. Down 1.25% right now at a 117 point range. That is 146% of average. However, we continue to remain within a very bullish price structure right there. That trending structure is very, very strong. You can see from here, every time it goes up, it pulls back, goes up, pulls back. It's very, very bullish, and it continues to maintain a clean market structure. So right here, that 7K is very important. Even if we were to dip down that low, that would be very similar to where we are right now with the ES. That could still be a great buying opportunity. I don't believe we get that low. Perhaps we can take out this low here at 7100. Maybe we've already found the low, as every time price gets below the 8 period moving average, most of the time by the end of the day it's back above it, and we're below it right now. It would have to close back above the current midpoint to get back above it. Remember that 72.14 half, that's the previous high of the year. That's the major level right there. That's kind of the pivot to watch overall. So right now, below that level, do bulls come in and defend, or do bears defend the 7200? Because any failure to renegotiate back above that 72.14 half opens up a return as low as 7,000 and perhaps even lower. Alright, let's take a look at the YM. Here's a look at the YM over the recent few days. This one, and this is important to note, again, we noted it in our trading room when it was happening on this day here. We noted how the YM was quite a bit more bearish than the broader market, and it led the push downward and actually saw much more weakness than the ES or the NQ. There was kind of like light, medium, and kind of strong in terms of the trend. And this move was pretty strong on the way down. It broke back below the 24,886 key level and below the 24,866 key level. And that's important because, as I mentioned yesterday, any failure to hold that level opens up a return back toward 24K, which is that recent low. So a big time push here. Again, this one is the most bearish. However, very much like the others, every significant pullback we've had here recently has been met with a stronger upside push. So if bulls can find some support somewhere in this area, maybe even today this could be the low off of this FOMC key level, we could be looking at a clean reversal back to the upper FOMC key level, followed by perhaps a continuation even higher. So right now, very important to see how price responds today. But after these recent pullbacks here over the last few weeks and few months, we've seen this market respond each and every time. So we'll see if that continues to be the case. All right, taking a look now at crude oil. Here's crude. Quite a day yesterday, big time strength. Never pulled back to value and instead just continued strongly higher throughout much of the day before closing back right at the midpoint. And that was our target yesterday in the pre-market report, was that given how strong prices have already rejected, we would likely see a return back to the midpoint of Friday's session. And that's exactly where price went to. Now, already we're seeing a sell-off away from the midpoint this morning and a push back to yesterday's midpoint. So we're bouncing between those two extremes right now. Very important high, very strong low. That could perhaps give us a short-term key range to play with for now, as this market looks to perhaps build out in this range. We could be looking at this market failing below 66.29 and dropping to 62, but it could do so in a manner that's kind of sideways, or it could just kind of get there quickly. So right now, as long as price remains below 66.29, there's an expectation that we could see 62s up ahead. So right now, really got to get back above that zone if it's the bulls here. Otherwise, could be looking at further weakness here until proven otherwise. Taking a look now at, let's take a look at gold. Here's a look at gold. Now this one had been coiling up for a while, and then we had the failed range expansion right here. Failed new high, could not hold above 1310. A major continuation on Thursday, which broke through the 1295 and 1290 zones. Yesterday was a digestion day right here. Digestion after stop run. This right here is a failed new high after stop run, and we're seeing a continuation. So a big time move lower, and anytime you get failed new highs like that in a down moving market, it typically leads to a pretty strong continuation to the downside of 2 to 3 days, or 1 to 3 days, but a pretty good move nonetheless. Again, as we mentioned before, any failure to reclaim acceptance above 1310 or 1306 suggests a move as low as 1252 as a high probability target, and probably even as low as 1240. So we still have much more weakness here, especially with that failed new high. We could be looking at much more downside. But again, failure to hold below 1280 could bounce this thing back up. So that failed new high will be important pivot for bulls to try to run the stops above. Alright, that is it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.